Microsoft stock, ticker symbol MSFT. Microsoft is up more than 300% in the past 5 years, and in the last couple of months the stock went up and down a lot. Next to that, Microsoft increased the dividends for 18 years in a row. But is Microsoft also undervalued, and will this company continue to grow in the same way as they did in the past years? In this video I will show you everything you need to know about Microsoft. I will show you what Microsoft exactly does, and I will show you my fundamental analysis to see if Microsoft stock is a buy or not. I'm very excited to see what you guys think about Microsoft, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stock at great prices. Please subscribe to join the community to receive multiple analysis every week, where I will tell you everything you need to know about the stock market. What does Microsoft do? So, Microsoft is the largest company in the US by market cap, and the key activities are server products and cloud services representing 29% of the total revenue, office products and services which represents 25% of the total revenue, Windows representing 16%, gaming 8% and LinkedIn 6%. Microsoft has done a lot of acquisitions in the past years, which all contribute on a strategic level but also in revenue, of course. The most recent acquisition is Activision Blizzard. This is also their biggest acquisition all time and triples their second biggest acquisition in price, which was LinkedIn back in 2016. Activision Blizzard is a gaming company with some major titles such as Call of Duty, Candy Crush, World of Warcraft and many more. The reason why Microsoft bought Activision Blizzard is because they want to increase their gaming market share. Right now, the gaming segment only represents 8% of the total revenue, and if we compare the latest Xbox of Microsoft versus Sony's PlayStation 5, we see that Xbox only has a 36% market share and the PS5 is sitting at 64%, meaning they are losing in the gaming segment. With the acquisition of Activision Blizzard, they are adding more revenue to the business but also increase the market share in the gaming segment. Another interesting segment is Microsoft Azure, which is part of the biggest revenue segment. It's increasing big time versus the main competitors as we see in this chart. The last segment I want to highlight is LinkedIn. Microsoft did acquire LinkedIn back in 2016, and since then the users did grow in the same way as they did before, and nearly doubled since 2016. But the annual revenue of LinkedIn from 2017 to 2020 has increased more than 300%. It's highly likely it will continue to grow from here, and since the total amount of users is continuing to grow, and so is the revenue. On a high level, all the segments combined, revenue increased 18%, which is quite nice, but gross margin increased 20%, operating margin increased 32%, and net income did increase 38%. Which is really nice. Margins are increasing every year, so Microsoft makes more and more money. So now that we know exactly what Microsoft does, it's time to check the historical stock price performance and compare them to some different competitors. Since Microsoft is highly diversified in what they do, it's really hard to pick one competitor. So that's why I selected multiple competitors to see how the stock price did perform versus them. If we check the 5-year chart, we see that Microsoft is up 335%. The S&P 500 is up 87%. So you already did beat the S&P 500 big time by owning Microsoft on the 5-year chart. If we check the competitors, we see that Apple is up 368%, which is a little bit higher than Microsoft. Google is up 200% and Sony is up 191%. All these companies did beat the S&P 500. Microsoft is on the second spot behind Apple on the 5-year chart. If we check the 6-month chart, we see that Microsoft is down 3% while the S&P 500 is up 1%. Apple is up 16% and both Google and Sony are down. With the rates going up again and all the things that are happening in the market lately, and right now of course, these tech companies are going up and down in stock price as well. So you can make a lot of money by owning tech companies on the long term, but you can also lose a lot of money. So that's something to keep in mind. Next up are the fundamentals of Microsoft. Microsoft is a 2.2 trillion market cap company and the second largest company in the US by market cap. The current PE ratio is sitting at 31, which means you pay a premium for this stock. Normally I would say everything above 30 is too high for me, but in this case it's very valued right now I think. Microsoft has an average year-over-year growth of 15 to 20%, which is quite high for companies this big. So for me the PE ratio around 30 is fine and under the $13 is a buy I think. One of the things people like about Microsoft is the profit margin. Right now the operating margin is sitting at 42% and the profit margin is sitting at 38%, which is really high. Return on assets is sitting at 15% and return on equity is sitting at 49%. Both are really high and do comfort me a lot. The 12 trading month revenue is sitting at $184 billion and Microsoft has a quarterly revenue growth of 20%. Here we see that the revenue of Microsoft since 2010 and we see that it has increased nice and steady. It took Microsoft 8 years to grow from 50 billion a quarter to 100 billion a quarter. And it took them only 3 years to grow the quarterly revenue from 100 billion to 150 billion. Really impressive I think. Next up is the balance sheet. I think this is probably the thing I like the most about Microsoft. Total cash is sitting at 125 billion. Total debt is sitting at 18 billion. They are able to pay off their debt very easily and they have even some cash left. Companies use cash to grow the business and Microsoft can easily grow the business and pay off the debt if needed. If we check the cash flow statement, we see that operating cash flow is sitting at 83 billion and leverage free cash flow is sitting at 46 billion. It's really important for a company to increase their free cash flow every year because free cash flow is used to pay down debt, buy back shares, do acquisitions, pay dividends and a lot of other things. All these things led to an increase of value for the investor. In this graph we see that free cash flow is going up big time since 2016, so that's a nice thing. As I said a second ago, free cash flow is used to buy back shares, which is really important for companies this big. When a company buys back shares, the EPS is going up, which attracts other investors, meaning the stock price is going up as well, and since there are less shares outstanding, your stock will become more valuable. In this chart we see that shares outstanding are decreasing big time, and Microsoft buys back a lot of shares, which is really awesome. Next to that, if the shares outstanding are decreasing, less dividends will be paid. This means that it's more easier to maintain and increase the dividends. If we check the cash dividends paid, we see that it's increasing every year. But this is because of increasing dividends, which is a great thing. When we check the dividends, we see that Microsoft paid a 0.87% dividend yield at $2.48 annual. Right now, the payout ratio is sitting at 26%, which is really low, meaning there's roughly 75% left in free cash flow to pay down debt, buy back shares, do acquisitions and all other things. The 5-year growth rate is sitting at 9.49% and they increased the dividends for 18 years in a row. To be honest, I would love to see a higher 5-year growth rate. The last thing I want to discuss is the comparison with the biggest competitors. Earlier in this video I discussed the stock price and in this part I will discuss the fundamentals of the companies. In this case I will check Apple, Alphabet and Sony. Since Microsoft is highly diversified, I think it's really interesting to check all these companies. Right now, Microsoft has a PE ratio around 30, Apple has a PE ratio around 27, Google at 22 and Sony around 16. I think all companies are a buy when the PE ratio is below 30, but it has to be said that Microsoft has the highest PE ratio right now. If we check the price to free cash flow, we see that Microsoft is also the highest with 25. Apple is sitting at 24, Google at 18.5 and Sony at 11. In the best situation possible you want this number around 20, but since these companies are increasing the free cash flow in big amounts every quarter, I think it's justified to sit between 20 and 25. Again, Microsoft is the highest, other companies are doing a better job here. When we check the revenue growth, we see that year over year Google has the highest revenue growth. Microsoft is sitting at 20% and Apple at 28%. Sony has the lowest year-over-year growth of just 16%. But on the 5-year compound annual growth rate, Microsoft is sitting at the second spot with 15.77%. And only Google has a higher compound annual growth rate of 23% in the past 5 years. When we check margins, we see that Microsoft has the highest growth profit margin, with 68%, and also the highest net income of 38%. Second spot, Google with 29%. Both return on equity and return on assets are looking good for Microsoft compared to the others. Overall, I think Microsoft is doing a great job versus some big competitors. So my final conclusion is that Microsoft is a great company to own. Right now, it's my biggest position in my portfolio and I'm planning to buy even more shares of Microsoft. The stock has come down quite a lot lately and went up a few times after it. I think with the current valuation, Microsoft is fairly valued and you couldn't go wrong in the long term with owning Microsoft stock. It's the second largest company in the US by market cap and they have enough cash to pay down all their debt, so that's a great thing. And they also buy back a lot of shares, so your shares become more and more valuable every time. Next to that, it's highly likely that the cash position is going to grow even more from here. All the business segments are growing, and with the most recent acquisition of Activision Blizzard, I think they are increasing the gaming market share. I'm really curious to see if Microsoft is planning to do more acquisitions in the coming months or years. Right now, Microsoft is a strong buy when the PE ratio is below 30. So with all the fear in the market and volatile moments, I think Microsoft is a buy for me in the coming weeks. For me, it's a long-term position and I'm really happy with the fundamentals right now. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.